I'm glad Prashant touched upon the topic of investment along with entrepreneurship, because I'm sure there are people in the room who've since morning started thinking about, if not entrepreneurship in terms of a startup, can I invest in a startup? Which are the right startups to invest in? So our next panel discussion brings investment into the spotlight. We call this panel discussion Funding the Future, Decoding the Future of Investment. Investment trends are shifting rapidly, as we all know, and they're driven by emerging technologies, changing consumer behaviors, and evolving market dynamics. From venture capital and private equity to angel investment and alternative funding models, investors today are rethinking strategies to identify and back the next big disruptors. In this upcoming panel, we have industry leaders, seasoned investors, and startup founders who will decode the future of investment, share key insights, and explore how businesses can position themselves to attract funding in an evolving landscape. So are you all ready to dive in? Are you all ready to dive in? Yes की आवाज नहीं आ रही है तो तालियां बजा सकते हैं. Thank you so much. So on that note, I'd like to invite our first panelist. Our first panelist is a best-selling author and a top 10 angel investor. May I invite Apurva Chamaria on the stage, please. हाँ, please तालियों में कंजूसी मत करो. Our next panelist is the co-founder and CEO of V Founder Circle and Invstt. May I invite Mr. Neeraj Tyagi on the stage. Next we have Hari Balasubramanian, who we nicely and with love call B. Hari. He is an angel investor. And we have the director of Salarpuria Group, another Apurva on the stage. This is Director-Salarpuria for you. And to take this discussion ahead, the moderator is somebody who does not actually need an introduction, but for the benefit of new faces in the room, he is the founder and CEO of A1 Future Technologies. Please welcome Srish Agrawal on the stage. Welcome all of you, the panelists, and Srish, please take the discussion ahead.
Good evening, friends. So the topic of this discussion is funding the future, right? So just to set the context right, the objective of discussion is going to be, because we have most of us are either founders or entrepreneurs who are looking for funding, and we have got a lot of questions as to what investors think, what are investors planning moving on as the world is evolving. So the objective of discussion will be to answer those questions and try to get into the minds of these stalwarts, investors, and understand how they think so that we can plan accordingly. We can evolve accordingly, right? So my first question goes to Apurva, right? So Apurva, as the world is moving on, what are the industries or sectors that you foresee are going to grow here on in the next 5 to 10 years' time? And what trends are you seeing which makes you believe that these are the sectors that you should be looking at?
That's a great question. I think, of course, there are much better people on the panel to speak about things like direct-to-consumer and consumer brands. So I'll stick to something which I feel, I've done a lot of work on. I think manufacturing is going to be a huge sector. Huge, actually. So we will see many more Dixons, Sanminas, Foxcons come up. Digital manufacturing is going to be very big. Hugely bullish on the sector. We've done a couple of deals there. Defense, huge. I've personally just invested in a deal, anti-drone warfare, radio frequency jamming company. So defense is going to be huge. Europe is going to possibly procure 50, 60 trillion dollars of defense equipment over the next 20 years. Even if India gets like 5, 7, 10% of the demand, I think defense companies will explode. Space tech is going to be huge. We are seeing a lot of compounding from the time when we had only Pixel to now almost a new space tech company coming out every week. So these are the three sectors which personally I'm very bullish on.
So you mentioned defense, right? And space tech. So are these sectors getting the required amount of support from the government? Because I think that will play an instrumental role for these kind of startups to really grow here on.
Absolutely. So defense government has a fund called IDEX. IDEX allows, equity. They give early orders, 5 crores, 10 crores. And then once you meet the POC conditions, you start getting larger orders. There are specialized defense funds in India. So there are funds like Mountech Ventures and others who do a lot of defense investments. And government has also put together a space tech fund. So I think between both the sectors, you are seeing, we always had this problem in India. If you're doing something in deep tech, maybe you will get the initial capital, which is angel or VC. But then next 7, 8 years, because you're still going through TRL1, TRL2, TRL3, you will not find follow-on investors. We're gradually getting out of chasm. I would not say we are completely out, but I think capital availability is now coming in.
Great. Yeah. Neeraj, a similar question for you. I see that you have invested in a lot of EV companies, right?
Yeah.
So is that some of your thesis that why do you really believe that moving on, EV is a sector that is going to grow from here? Or maybe you would have to like some other sectors to this list.
Sure. See, both me and Apoorva was there in a manufacturing deal I see in the morning. So that is a proof of like how manufacturing is taking center stage. So, and it's good for India because government of India after I think post-COVID actually has started putting a lot of attention on the MSME, SME sector and a lot of startups who are trying to either digitize the value chain within manufacturing and creating efficiency and better business models. I think those are the businesses which are getting a lot of traction from the VCs now. It was also untouched industry for a very long period. So now that we have some future, some very like proven success stories in that, so that's why basically I think more and more attention. But just taking the clue from what he was saying that space tech is definitely deep, anything with deep tech, okay? Be it pharma, be it space tech, be it drone, manufacturing, hardware. These are the kind of companies which otherwise, I think 4 or 5 years back was finding it very difficult to raise capital because they were not 100% favorites of Indian VCs and there were no other alternate way to put money in that because for angels it was like long gestation period before they even see the first revenue actually. So that these were the like problem statement, but I think of late, one because of some huge success stories in West and in India also. So even the angels are now looking at making the first like investments very, very early in these companies. So like for example, we invested in Pixel, Space Tech, we invested in PeerSight, we invested in quantum computing. These were like unheard from an angel perspective, but I think people are now very, very excited. We are now evaluating at least like 3 more space tech company right now. So that is one. Second is, if you ask us as a network, as a fund, now we have 3 funds, we got a global fund also, we can invest outside India. So that has also given us like a lot of opportunity to come and be a part of like large global companies very early. But how we see opportunity is not in terms of sectors, but in terms of themes, okay? So inclusivity is a like big theme for us. So anybody like who is trying to bring in more target audience into that particular business model or solution, I think, so be it like normal company like a healthcare, fintech, even those are like okay with us if they are like stretching the envelope, okay? If they are bringing more people inside that business model. So inclusivity is one, then industry upgrade. That's where EV comes into the picture. So EV was not like innovation on its own, but actually it was trying to upgrade, okay, the supply chain. That's where the biggest of the EV use cases got hit in India. People were thinking that I think large consumer companies will come as a success model, but I think it is a B2B model of the EV actually that got first the traction. Now we got very big companies like Zip Electric. Then Blue Smart is already there. We have invested in 10 odd companies, okay, almost all kind of business model. So it was not a design thing. It was an opportunity, okay, right there to be grabbed. VCs were not very, very sure about whether they wanted to put money in those companies. So I think that was the best use case for micro VCs and angel networks to come and, okay, do those deals. And I think it has paid to us. And then it has become a moat also, because once you start investing and there are like few good success stories within that sectors, those founders are the best mentors and investors now into the rest of the company. So we invested in 10 EV companies now. All those founders, not all of them, but at least like 4 or 5 of them are like very big companies. They're like more than $200 million plus companies. So they have seen the cycles and now they are becoming investors in the new companies that we are funding. So in a sense, basically a lot of network effect actually has started playing. And I think that is the story of all the funds, that wherever you have seen success, more and more startups comes to you and you kind of like have a network effect. Yeah.
Neeraj, you mentioned about EV, manufacturing, Apoorva mentioned about defense. Yeah. All these sectors are supposedly capital intensive sectors, right? So anybody who wants to start a business into this domain, will they really be able to serve the purpose by reaching out to an investor who will put in a small ticket? And at a very early stage, reaching out to a fund or VC is something that is not really, they are not really very approachable if I talk about a new entrepreneur who is starting into something. So
see, problem was there for capital, but I think now the bigger VCs are also backing these companies. Like for example, the quantum computing story that I'm talking about, they were not doing great revenues, okay, but it was a big story, a big multiplier, okay, opportunity. And it could have gone wrong basically also in case the big VCs are not showing interest. But I think all these sectors which he is talking about, I think a lot of VCs are now taking these as a like hot sectors. So when you see that kind of attention, so even the like first check guys, angels, HNIs, family offices, for them also it becomes an obvious choice. So I think the scenario has slightly changed. These sectors are getting attention from the large VCs also. That means I'm not worried about what will happen as far as next round of fundings are concerned. If it is a right choice, due diligence, your curation, I think that's a key. If you are able to create that kind of network that right deals are coming first to you, or you have a discovery basically mechanism, then as soon as basically you choose a good company and you put out like first check in this, there are like bigger like VC funds who wants to take up that. So that network effect is working right now with us.
Okay. Apurva, we wanted to add something.
Yeah, I'm saying, see, what is happening is, in India, we had a period where markets were doing very well. So if markets are doing very well and giving you like 20%, 25% Y on Y, you're only doing unlisted and private markets to do better than that. Otherwise, it doesn't make any sense. If you're getting 25% in a liquid market, which you can exit anytime on an app, why would you want to do illiquid for 10 years, 20 years, 15 years for a subpar? So basically, when you're doing private markets and you want to beat 20-25% IRR, you have to look at companies and sectors which will give you a 50-100x potential. And space allows you to do that, defense allows you to do that. Look at SpaceX valuation. There are so many investors, maybe even in this room, who've bought secondaries of SpaceX. In 10 years, 15 years, I don't think there's anybody in the room who will disagree that we will not have 2 or 3 world-class large space companies out of India. If this is the only time you can get in, after 10 years, it'll be all out of reach. So this is the time to invest in defense, space, digital manufacturing. After 10 years, you'll all be chasing like a very large valuation and it won't make sense.
So just to exemplify what he's saying, so we invested in PeerSight. It was an Ahmedabad-based company, not in a tier 1, okay? So tier 2 guy is ex-ISRO, yes. But you can if you can discover, if you can somehow get hold of these guys. We invested when they were done the first round at just 5 million valuation. And they got selected at Techstar US. Okay, NASA has given them a lot of contracts. And suddenly, basically, they were up in radar in every VC. So just in 3 months, the next round that they've done it was $30 million. So from 5 to 30, 6x in just 3 months. I mean, those are the possibilities that Apurva is talking about.
Right. Agreed. Harida, you have been very visible when it comes to F&B investing, right? So which is very different from manufacturing, defense, and these kind. So how do you really foresee the growth of these industries in the next 5 to 10 years? Or any other industry that you would like to showcase or give us some idea about the trends that are visible to you?
See, first of all, I would say that, we are talking about companies at various stages. For me, a startup is about a group of people or a founder who are discovering business models. So in India, the biggest problem was there was no money for discovery earlier, which means if you had an idea and you wanted to test it out, there was no way you would get finance from any institution, right? But today that situation has changed. So I see a lot of young people doing projects or trying to build projects which have not been seen before, heard before. For example, 3 years ago in Dehradun, for one of our Thai competitions, a guy had come. He was an Air Force pilot or something, but he then did his PhD, and then he started building something for space. I'm talking about 3-4 years ago. He started building some, material for space missions so that people can stay in space for some time. Now, last month I saw him in Bangalore. He's already put up a facility, and he went into IISc Bangalore where he got a facility. Now he's moving into his own facility, and he's raising a round. So the journey has been almost like 4 years from that concept stage to this. This is what is happening in India, where we are seeing young people who are all probably struggling to raise their first round and sort of prove that, but they are actually getting there maybe in 2 to 3 years. Now, I think today, what is required is, there is no, scarcity of money or funding. Today, we require bold entrepreneurs who can think beyond copying something which exists in other markets or trying to do something similar in the market. So, for example, I see so many companies which have come up with new protein from insects. Protein from insects, we would not even dream, but this protein from insects is what is being used for the animal, feed type of industry, where it gives more protein at less cost. So in India, we have to be very cost conscious, and anything that we do, we can actually sell it across the world with a very high profit margin. For example, if you take products like makhana, today we are absolutely, not selling it at the right price. It's got a great value as a natural, food, but we are not selling it properly. So I think today there are many entrepreneurs who have realized what is the value, because it's grown 80% or 90% comes from Bihar, and that too from a few districts. And it's got great potential, worldwide. So I personally think that today funding is not an issue. It is only bold ideas and entrepreneurs who are absolutely adventurous. We need adventurous entrepreneurs who can think about the next 7 years, 10 years, where it is going to make an impact. So I think India has changed very significantly, and I'm very happy to say that I meet many entrepreneurs who absolutely surprise you with the type of ideas that they are pursuing, and they are pursuing it very passionately. So I think it's a myth today that you cannot get funding for any project. Yes, you cannot get funding for the next, let's say Zomato or Swiggy, unless you have a differential where you can stand apart. The other place where I think there is a great opportunity in India is in the luxury segment. India has got so many rich people, but they don't get the type of luxury that they want or the premium services that they want. So I'm a big believer that premium services are going to really do very well in India, because they will be the best in the world. You will not be able to find any country where India's service, premium service can be better. For example, if you go to hotels today, the type of hospitality which Indian hotels provide, you won't get that type of hospitality in the US or Europe. Similarly, in Thailand or some of the Asian countries, the luxury that is provided to people will bring in a lot of foreigners. So that's another sector. Agriculture is a sector where I see phenomenal opportunities in India, and I see very young entrepreneurs who are working in that space. Healthcare is another space where I come across a lot of health tech companies, who are building devices, who are building for Bharat. The most important thing is there are many entrepreneurs in India today who are building for Bharat, and they are getting support not from investors like us, but typically from institutions. And institutions are supporting by giving them some type of a grant or a seed money or something like that. I was seeing in Shark Tank, there was one company which came in a few weeks ago. In 2019, we had given that company 25 lakhs from the Indian Institute of Management, just as a grant. Now that company over this period of time has actually built a product and a brand, and today all the sharks want to invest in those companies. So we have seen many such cases, and India has changed. We have capital available, but we need bold ideas. Anything that is very bold has not been done and tested. Capital is available, and India is a land of opportunity. Anywhere you go, there are 10 opportunities that you will find, because there are 100,000 problems which need solved, and India is such a big country. So I don't see, the entire environment has changed. In Calcutta also, I see some very good startups, but maybe they're outside Calcutta, but excellent entrepreneurs from Calcutta also. So I don't see a lack of funding. Calcutta as a market does not support, the way another city supports. But overall, I think it's a level playing field. You have to choose where you want to sell.
Harida, taking on a question, you gave example of makhana or insect protein. How replicatable are these businesses? For example, somebody launches this business after a lot of fanfare, and somebody else comes and starts the similar kind of a business. How's the competition? Is there any entry barrier?
Production, 80% is produced in India. Right? So we have to, and it is grown only in some soil. So the price is only going to go up, because you cannot increase the production like that. And it's a natural product. So it's like tea, right? Tea, Darjeeling tea, you can grow only in Darjeeling. So that the value of that will always keep on increasing, which means it will become more and more premium. So like this, there are plenty of products in India. For example, this ginger, many of these, our natural products, has got a huge global market. Today we don't sell it that way, but there is a huge global market where it is taken as a health food, right? And health food has got an enormous opportunity, not only in India, but across the world.
Thanks, Harida.
Just kind of to your makhana point, I think, very interesting insights you brought into that. On an airline recently, while I was traveling, I saw actually a packet of makhana made by a non-Indian company, and they were positioning this as protein puffs, a healthier alternate to popcorn. So I think what I'm trying to bring out is that, we need to differentiate our offering. We need to put it in the right, you put in a packet of makhana and put it out there. The consumer does not necessarily appreciate what you are putting out there in terms of health benefits, whether it is a lower calorie count, whether it's a higher protein count as compared to, say, the next alternative, which is, so I think the ability to put the value proposition in front of the customer is something which we need to work a lot more on.
Apurva, on the same point, I saw you were nodding when Harida was talking about luxury goods and all that, and your focus is in the consumer products, I believe, right? So maybe what are the trends that you're seeing, and which sectors are you looking at?
So, let me kind of go a little top down on this. I'll just use some numbers just to kind of, create a little bit of a picture. As most of us are aware, 60% of our GDP is private final consumption. Of course, that is a very broad brush when we kind of speak of that. But consumption is where our economy is kind of based on. Our GDP is largely a consumer economy. Where we are today from a per capita income point of view, we are at about $2,600 per person per annum. $2,500 is supposed to be the number after which the money starts going disproportionately to discretionary income. And, the way we look at India, while we look at one large market and we talk about, any company talks about taking 1% of the market or 2% of the market and it being a large market, the reality is that there are many markets within India, and a lot of the market is actually not accessible today because discretionary incomes are, and to be very honest basis, some of the numbers that we look at, 70% of the market is not really accessible to discretionary products. So we believe that there is the larger opportunity today is to play in the premium segment. There are a number of trends which I can kind of talk about there. And I'm just going to put some random facts, and we can there are some convergence of trends as well. So there is, for example, we are seeing the first set of people retire rich. We've not had in the past services, products being created, for the older people in our country, because while there was always a need, there was never income side of was not supporting it. We are today seeing a mobile job market, and the convergence of these two trends means that there is a very large demand from the senior citizens of our country, whether it is for services like senior living, healthcare at home, products which support their lifestyle, etc., or various kind of other things. So, for example, that is a segment which we are looking very closely at. Similarly, another trend which we look at very closely is that number of children per household is coming down. Household incomes in urban cities are going up, which means spend on kids is going up per household. Parents have lesser time; they substitute it, with other goods and services to compensate. So we see that as a big area of post-COVID. People have realized, the value of their homes and the space inside their homes, which they've, and we see that from the real estate perspective as well. So we see a lot of opportunity inside the home, whether it is, kitchen equipment, kitchenware, whether it is home cleaning solutions, because people want better products than the aspirations are growing. From a food perspective, and I'm talking about more the packaged food stuff, I think there was an era when a lot of people around us and were talking about health as a catch, and I think over a period of time what people have realized is that for us, food outside of the home, whether it's packaged or going out, is still an indulgence, which means that you cannot compromise taste for health. So I think the paradigm which has emerged essentially there is better for you. So can I have, a snack? Can I have a makhana which is better than a popcorn? Or can I have ice cream which is lower in calorie for them? So I think these are a lot of these very interesting themes which we are seeing, and we pretty much are kind of the way we look at it. We look at each of these themes and look at opportunities within each of these segments. And I think even from an entrepreneur perspective, these, and then there are of course a lot many more things which in the next 5-10 years we believe can become very large markets.
Apurva, I'll come back to you. We have been talking about the industry, great. Now, as I see, there's a lot of variance in the vision and the trends that all of us are looking at, right? So, how do you really value a startup? Because if I come back to you and tell you that I am starting a manufacturing or a defense startup, how should I really value myself, and how will you really decide that the value that I put on my startup is really legit or not?
So I think it totally depends on are you early stage, seed stage, early venture, growth, pre-IPO. So that's one thing to look at. Second is there are sectoral benchmarks for valuation. Like in a very, very heady bull market, DTC companies were going at 6x, 8x. Now they're all down to 2.5, 3x. Even the best of them.
We have to qualify revenue because a lot of people.
Revenue. Not EBIT, revenue. So I think it also depends on what phase of the market are you catching, and are you being able to hold back versus are you just investing in FOMO. Third, are you focused on domestic markets versus global? Global companies get valued differently versus companies which are just looking at India. And fourth, are you being able to show escape velocity? So like in SaaS, we call it rule of 40, which means your growth plus EBIT should be more than 40. So every industry has multiples, which we use to see whether a company is hitting escape velocity. So any company which hits escape velocity gets valued higher, which means you're a market leader, you're outperforming the market, versus if you're just like anything beyond the first top 2, 3, don't get a kicker on the industry valuation. So I can't give you a silver bullet answer, but it depends on the stage, the market cycle. Are you industry leader versus laggard? Which sector?
So in a clear way, there is no perfect thumb rule formula that you can put on an Excel sheet and get the valuation of a company. It is more about the kind of vision that the entrepreneur has and whether that vision aligns with the investor's vision of the multiplication effect that he's going to get out of it.
That, and I think you can, if you're pricing the round, you can always extract better value. If somebody else is pricing the round and you are co-investing, you will not have pricing power.
Neeraj, there are profitable companies they are loss-making companies, but the third companies are impact creation companies. So if a company that is creating impact, but is not being able to create a lot of profitability, will an angel investor or a fund like to invest that company? Or as an entrepreneur, you should think that if I'm creating an impact-based company, I should not actually reach out to investors?
No, I think that's a good question from the perspective of founders also, that what kind of company they are building. See, the problem with the VCs is that they are thesis driven. Okay, so when they raise capital in advance, okay, even before starting the first deployment dollar, they already have declared that on these parameters we will be investing capital, and there is a fixed timeline, okay, of that fund. So fund has a life cycle probability also to meet, which is like if it is an 8-year fund, within those 8 years they need to find a good company, invest in that, grow that company and take exits. So sometimes what happens, if it is a VC investment, it will be a very hard-coded one. That's the most hard-coded capital that founders can chase. So better is for the founders that if what they're building is not fitting perfectly into the VC thesis, then look for people like who have a slightly more flexible like investment thesis. So that's where networks, HNIs, family offices, angel investors comes into the picture, because they will be not driven by only the wealth multiplier. They will look for other things, and that's where the impact becomes a very big like story to kind of gel. So if you are building something in impact, either reach out to the people or VCs who are impact focused. So there are very hard-coded impact funds also who is only looking at that value first and then rest of the things. But otherwise, I think if you are that kind of founder, then raising first few rounds, you should basically chase more flexible founders. Okay, like for example, we are very sector agnostic fund. So we invested in almost like 12, 13 different sectors. So for us, the founding team, when you were asking for what is the criteria, for us the biggest tick mark is the founder's pedigree, what kind of founders they are and what they have done till now with that idea, and what they are promising. If that basically is something gelling with our gut feeling and our basically assessment, then I think we are good ahead to fund that company. So that's the answer of, if you are not so profitable, if you are not basically chasing a large TAM, then also can you basically be fundable? Can you still basically go to a right? So a little bit of like homework, I think that is what, and what Harida was saying, the good point that right now we are sitting in a time where every city have hundreds and thousands of people who are ready to back companies. So I think funding and the first few checks is not a problem at all. If somebody is saying that I am facing this problem, that is why I am not able to build a venture, I will not take it.
Money is freely available.
Money
you just
is
need to have
available.
Out of the box idea.
In fact, there is other way around also. It sounds very weird, but that is the case. There are founders where we have given them a free offer, okay, an open offer that whenever you want money, please take it, because they are so good. What they are doing is so good. They're like one team sitting here, okay, there is a founder here, okay. Can you just raise hand, okay. So he's one founder, last 3 years, we already given him a first like check offer. He is not taking it as. He's a bootstrap, he's doing 4 crores a year right now, profitable company from Calcutta, doing a very niche, okay, product category. So I think I don't see a harm in companies like this, which are without funding also, they are like.
Now great, this is a testimonial for Calcutta in an open forum where an investor is chasing a founder. And the founder is not saying yes. Bhai, haan bol de.
No, I think if you ask this question, Srish, with all 3 of these guys, that is there a founder that you are chasing? I think they all are chasing at least like 4 or 5 companies.
I'll come back to Harida in a moment. Before that, what are the red flags that you see in a business model? Ki aapke paas aaya, you get a idea from someone, and clearly, whatever might be the opportunity, you straight away say no to it.
See, the biggest red flag for us is not so much from a business model perspective, is from a founder perspective, from a ethics, any question mark perspective. The moment I feel that, the founder is telling me something versus something else which he genuinely believes or is a fact, it's an absolute red flag. If there is any question on governance in terms of any numbers which are reported, in terms of any kind of ethics, because it's a, business models keep changing over a period of time. Outcomes are never in our hand. But if you don't feel comfortable with your partner on the journey, we don't want to start that journey. And I'll give you multiple examples in our own portfolio across the city where we had invested in a particular business model. And by the time the company was, growing, it was an entirely different model. Like one small example in the consumer space, we had invested in a company called Hokey Pokey, which was an ice cream company. Today that company is called Epigamia. It's a Greek yogurt company, selling Greek yogurt. So the business, the product, the business model, all of them, they used to have cafes and this and that, entirely changed, but the founder is the one you are backing, and the broad space is what we are backing, especially when you are coming in very early, because you don't have too much of past data or any kind of history to look at beyond the personal history of the founder, and of course your conviction in the space, which we bring from, whatever our insights are from a top-down perspective.
Right. Beyond funds, beyond money, there is one more thing which is really important for any startup founder is mentorship, right? And Harida, what I understand is that you get involved quite a bit with quite a few startup of yours where you actually mentor them and help them grow. Can you give us some examples, some highlights where there was some kind of a requirement and you added a lot of value and that gave wings to the dreams of the founder? Maybe we'll be able to learn from that.
See, actually, a founder's journey is a very tough journey, right? Because you are like a scientist trying to discover something, right? And typically what happens is you continue to make mistakes. So what happens is, as an entrepreneur, I have made plenty of mistakes in my life. And there was nobody to tell me that, if you had done this, you would not be making this mistake. So my mission in life is to ensure that any founder who is going in through this journey, the number of mistakes that he makes, known mistakes he makes should be reduced. He can make unknown mistakes, but known mistakes should be made. So I passionately help founders to tell them that please, don't do this mistake, because this is proof that if you do this, this is going to happen. But at the same time, I always tell them that the decision is yours. So, the journey is a very lonely journey. It's a very tough journey, and there is nobody who can understand what a founder is going through. I think I am able to empathize with founders in any circumstances. Fund is not raised, that is also a problem. Fund is raised, that is also a problem. You are not able to find people, that's also a problem. So the founder's journey is full of such challenges all the time. And they can't share this with anybody. They can't share it with employees. They can't even share it with their wife, right? So they need somebody with whom they can actually share this. And that is what most founders miss, and because of which they end up taking wrong decisions, or they get misguided by investors. See, I totally believe what Vinod Khosla has said, that 90% of investors don't add any value or add negative value to founders. So it's very important to choose your investor properly. So I think, I act like a joker in a pack of cards, because a founder who starts, doesn't have the entire trick with him. So, because of my experience and because of the way I understand things, I can fill in any gap which a founder finds in his place, because he cannot hire a person. So I do everything as a giving back to the ecosystem, and I learn in the process quite a lot. That is one of the reasons why founders love me, and I get overwhelmed with the type of
that is your humbleness, that you say that you also learn in the process. I really
I
appreciate that.
absolutely learn. I learn from all founders, and there are a number of instances. For example, in Calcutta itself, I have met many founders. 5 years ago, I told them, "Yaar, aisa mat karo, ye nahi chalega." 5 years later, when I come to one event, they say, "Sir, now we are changing it." I said, "5 saal kya hua? Why did you waste 5 years?" I told you that day itself, look at changing the model. This model is not going to work. You're not going to get invested, or you're not going to make any money, right? So the realization happens late, but this is what happened. There are many such instances. For example, some of the people today, I remember that, when Gaurav started, Gaurav Jalan, M-Pocket, he wanted to do a P2P lending company. And when the policy was coming up at that time, we studied the policy, we thought that this cannot be done because it's got too many constraints. That is when I had proposed to him that why don't you do a pocket money type of a, lending company where you give it to students. Because all students who live away from home, they run out of money in the end of the month. So we thought that we will give 500 rupees and take back 600 rupees in 1 month. That's a fantastic return. And actually it worked very well, and right from first year he made profits. And humongous profits, because the returns were fantastic. What I'm saying is these are the type of things when you brainstorm a idea, a lot of things come because of experience, and a lot of things come from the founder's side because they look at the world very differently. Today's young generation is where, the market is. The young generation is very adventurous. For example, gaming. If you see gaming companies in India, we are going to have some fantastic gaming companies in India. Not the, some of these 11 companies, what is that name, Yeah, Dream 11, not those types. We're going to have even bigger companies than them from India, because India is a very big gaming market, and today, many of our youngsters, they play these games very well, they understand what a gamer requires, and today there are so many studios which are doing this work. I'm very sure that in the next 5 years, we will see amazing global gaming companies come out of India, which means there will be studios coming out of India. So India is a land of opportunity, and I think more and more people who know the business should be able to come forward and help these people in terms of giving them a direction so that they go through a path of least resistance. In entrepreneurship, if you go through a path of least resistance, you succeed very fast. And that is what should be the job of a mentor.
Thank you, Arida. Apurva, when a founding team or a founder reaches out to you for funding, what are those must-have ingredients that you look into in a founder or the founding team before you say yes? That is non-negotiable for you.
So firstly, I think 90-95% of my portfolio is all through referrals. So because all of us, get like 50 to 100 outreaches a day. So it's just not physically possible to look at them, reply to them. So 95% portfolio is through warm leads, either through a portfolio founder or a co-investor or VCs who know us. So that's 95%. And that's my firm advice to founders in the room. It's very hard to really raise. You can, there's syndicates and stuff like that. But if you really want a good investor, it's important to go through either a portfolio company or a co-investor. Secondly, 95%, again, 90-92% are second time, third time founders for us. So very strong bias towards people who have raised money earlier, run a VC funded. At least my personal cohort is not the 19, 20-year-old founder.
Right.
And there are investors who do that as well. Like there's Campus Fund. Richard does a great job of school, college. I personally don't do that. Thirdly, I personally don't do pre-product, pre-revenue companies. And again, there are people who do that. So I think each of us as an investor has our own thesis of what has worked for us. And good part is you can win either ways. There are many paths to get to heaven. So when I'm looking at founders, these are the things I'm looking at. Was this a warm introduction? Are they experienced? Have they run this business earlier? So what's the founder market fit? For me, founder market fit is at times bigger than product market fit. Right. Yeah.
So will any of you be interested in talking to a solo founder? Because what I understand, the way the world is moving, the days are not far off when there will be one-person company which is $1 billion company, right? So we have always heard that whenever a founding team reaches out to an investor tells him, कि यार तेरी founding team कहाँ है? तेरा founder कौन है? Why should I really depend only on you? Then my risk factor is very high. So moving on, as the things are evolving, if you get an opportunity that there is a single founder, one-person company, and you find that is a great idea, will you like to make a move? Any one of you? Sarida?
I think, it's always good to have more than one founder, but single founder companies are fine, because a founder who realizes that he cannot single-handedly drive the company, it's fine because he'll build a team around him. So, and if you see some of the best entrepreneurs in the world, they've all been, they've started alone. And in the process, they have picked up, let's say, somebody else as a co-founder. So in India also, we've got many such examples of companies, single founder companies. See, VCs, again, I'm telling you, VCs have their own way of looking at things, right? They want two people because they want an insurance, right? But, that shouldn't matter, because what matters is, are you solid in terms of your belief and in terms of your direction? At the early stage, we typically back on a single founder. If there is a team, we are more than happy to look at the team in terms of complementary strengths. But there are sometimes two founders with the same background come and those companies fail. So we really look at, complementary strengths in founders. There are 2 software engineers who start a company and it fails miserably. There are 2 engineers or, advertising, executives who start a company, it fails miserably. So founding team, if there is one solid guy, he understands that I've got, a gap. For example, now I'm working with a lawyer. She's from Calcutta. She's doing a legal tech, but she's a single person. She says, sir, I'm looking for a co-founder. I need a tech co-founder. Can you find me one? Right? So there are people like this who realize that they need somebody and they're looking for that. So they are all fine,
Thank you, Arida. So we don't have much time, about 4 or 5 minutes or more. So I've received.
If you don't mind, I'll just quickly
Please.
offer a separate, another paradigm to this. I'm saying, we have plenty of single company, founder companies in our portfolio. The other thing is sometimes 2 founders also adds the risk of their interpersonal relationship interfering. So I'm saying there is never a case of one is better than the other. I'm saying dynamics are different. We need to be aware of them in both cases because that is that added element which comes into play. We've seen plenty of cases in our country where even husband-wife, founding companies and things have gone fairly awry. So
Yes, they were very good friends on the first day, but later on the company broke down just because of their
interpersonal.
Right. So now, just for the 4 or 5 minutes, let us play a small game, right? A lot of startup founders have a lot of complaints or misconceptions about angel investors or investors, right? So let us do it like an Aapki Adalat type of thing, TiECON Adalat. I'll put forward some complaints, right? And maybe we can debunk the thought process which the startups have. Now in this, I will not ask question to anyone. I'll just need very quick answers. Anybody who can answer that question, just pick up and one answer, right? First complaint that the startups have, that you invest only in startups that has got IIT or IIM founders.
Wrong, totally wrong.
You always want startups to be profitable from day one, but fund only the loss-making companies.
Totally wrong.
Absolutely.
When a startup means it has no business model, it's discovering a business model. So we fund the discovery process. So see, this is the gap.
Sir, Mike.
The mic.
See, most of the founders don't understand that nobody is asking you to generate profits and come. If you're generating profits, you don't need funds, right? So we are there to fund a discovery process, which means you have a thesis, there is a market, and there are very strong signals. Now you actually want to go and execute. Some of them actually execute it with their own funds, and then you want to scale or you want to build a team, and that's why you require funding. But most people think that actually it's a misconception that you have to make profits. Startups which make profits, they take money for scaling. That's a different type of investment thesis. Whereas real investors, which means the startup investors, invest in discovery process of where a business model lies. And that's a process which takes time and requires money, but not big money. Aapko kitna chahiye? Sir, 1 million chahiye. Kyun chahiye? No answer.
Okay,
that is a problem.
So
Next question,
So
Rida.
Srish, what you're saying is basically all 3 things that you asked is the complaints of people who are not doing their homework. That is the problem. So then they work on misconceptions. They are not even like realizing that which founder you are or which investor you are reaching out. Like Apurva very clearly mentioned, if it is coming from a portfolio reference, it is like an immediate attention, okay, for him.
Srish, what happens is a lot of people indiscriminately reach out to investors. Like, if you don't know, Director-Salarpuria focuses on consumer brands and you're reaching to term for space tech, you're barking up the wrong tree, and then you will build the impression that, oh no, he didn't invest because I'm not IIT, IIM. Neeraj is absolutely right. I think all of us have our own thesis. Some verbalize it, some don't verbalize it, but you have to look at investments. What have they done in the past? And then have a very razor sharp approach.
Like we invested in Rare Planet, okay, for example, Calcutta, one big success story. So if he is recommending any company from Calcutta, it's an automatic qualification for us. I mean, we will get into a call immediately. Then we are not following any route, analyst dekhega and all that. So that's how it is.
Great. Absolutely right. So the objective was just to debunk these myths that some of the startups have. So thank you so much, friends, right? It was a lot of value addition for the startups who are attending this. So as we all understand that there is no thumb rule formula that this is the right investor. For me, this investor has got this thesis. You have to do your due diligence, you do your research, and then reach out to the investor. And if you have a great idea, you can add value, and you can show that multiplier effect to the investor, then the investor is ready to talk to you. Thank you so much, friends. Thank you so much, friends, for adding so much of value.
Thank you so much for this deeply, deeply insightful, realistic, and knowledge sharing session. May I now invite Mr. Charanpreet Singh, TiE Kolkata Charter Member, to felicitate the panelists. I think what I remember most now, what's going on in my mind is that a husband and wife should not become co-founders because things can go awry really.
Couples.
Oh, thank you for mentioning that. I was almost biased.
At least 9 investment out of the 100 plus investments we have made in couples.
Wonderful,
All of them are
wonderful. So
successful.
a big round of applause for these successful couples. और तालियां बजती रहेंगी तो आपका blood pressure level भी control में रहेगा. Panelists will obviously feel good about it. And I always feel that the responsibility of making a panel successful lies on the moderator. Until the moderator has done their homework well, the panelists really can't share all that value that they have to share. So a big round of applause. A big round of applause for Srish.